Good day, my name is Christelle from France de Klerk, Independent Technical Analyst. Sean wanted us to look at the VIX Volatility Index in the US. Now, the VIX measures the risk, stress, and fear in the market. And we can see if we go back to the history, in 2008, when that 50-week moving average, I've changed this to a 50-week moving average and not a 40-week moving average, because you can see it's a much better highlighter or measurement gauge for strong support or resistance levels on the volatility index. And in 2008, when the 50-week moving average waiting at 22.70 changed into a support, the market sold off, the volatility index spiked as risk of fear and stress in the market accelerated. The first strong resistance at the moment on the volatility index that needs to change into a support is waiting at 20.58. Above that level, we can assume that the probability of a pullback in the stock market and higher risk and fears can escalate. And below the strong support waiting at 1625, below 1625, we can assume that the risk and the fear would be less and less, and that the market might continue to run to even higher levels. The 50-week moving average at the moment is waiting at 24.83. Above that level, again, the probability of a pullback in the market and the risk of fear and stress to accelerate will be visible. So ignore the stochastic. It doesn't mean much at the moment on the volatility index. I would rather you look at strong support or resistance levels to see when the probability is there that the risk and the fear in the market can escalate. Ishmael wanted us to look at the Chalice mining graph. I'm going to use line graphs this week. I wanted us to look at rather, to take the noise out and make it a little bit easier to identify support and resistance levels or the trends in the market. And I want to take this back to a 40-week moving average. Remember, a 40-week moving average is the same as a 200-day moving average on a daily graph. But if you take 200 and you divide it by the 5 working days, trading days in a week, you get 40. And that is this long-term sentiment gauge for investors. Above that level, we assume that the sentiment for long-term investors is positive, and below it, it starts to warn, and it's normally it shows negativity. So at the moment, at $4.73, at the strong record high that was at around $4.96, we can clearly see that it seems like the share wants to turn around and that we maybe can see lower levels. Above $4.96, we can assume that the momentum to the top can continue again. Unfortunately, the next strong support on Chalice mining is only waiting around $3.53. But by now you know that when an instrument rises so quickly at such an incline that it's normally a lamp pole formation, which is a warning that be careful, it might have been too fast too soon, and that you can expect a pullback. The stochastic is overbought. My blue line has broken downwards through my orange line, which tells me there's a negative divergence, which increases the probability that the instrument might rather pull back than continue to rally. So do consider taking profits, but as I said, above 496, you can assume that the instrument can rally again. Fumani wanted us to look at Tongaat. And actually, the daily graph looks so different than the weekly graph that it almost can go either way. But Fumani, thank you very much. You made it clear that it is a long-term, opinion that you are looking for. So we can see that there's a beautiful cup and handle formation on Tongaat. And above that level of 10 Rand 48, the formation will be confirmed, which means the optimism will be on the table. But we can also see that lower highs is visible. Since, and I'm going to give you the time frame there, since about March this year, once Tongaat reached that level of about 11 Rand 26 on a line graph, it started to retrace, and even in the bounces, the highs were not as high as previously, and that is seen as a loss of momentum that we can see. Maybe there are more sellers taking some profit, maybe they're tired of waiting. But above that level of 10 Rand, I'm going to give you that exact level, above 1050 on a line graph on a weekly close, the cup and handle formation on Tongaat will be on the table. Take note, my 40-week moving average is a support, which means the long-term sentiment is positive, and my strong next support is waiting at 8 Rand 76, and that level of 25 on the 25th of Jan, waiting at R8.20. Those are levels that need to remain in a support in order to sustain the optimism for Tongaat. What is the full target? Let's be a little bit more optimistic here. What is the full target of Tongaat? It's the length of the cup projected upwards from the neckline, where the handle will be confirmed, or the cup and handle will be confirmed, which means Tongaat can go back to a possibly 1887. Remember, it's possible target levels. Nothing is a guarantee. Yes, my stochastic is a concern. It is look like it's losing steam, but have a look and make sure that these levels, 876 and my 40-week moving average, remains a support. It's always interesting to see, when the sellers dry up and when the buyers start to protect the share again. But those are critical levels that you can keep to make decisions whether it will remain a support or change into a resistance. Kevin also wanted us to look at Tiger Brands. Personally, one of my favorites in the market. A lot of the food retailers did not give us the rally a lot of the other shares have given in the last year. So at the moment, our 40-week moving average, it's approaching very fast, and that is waiting at 199.46. Below that level, negative for long-term levels, but as long as that level remains a support, we can assume that the long-term sentiment towards Tiger Brands is positive. Now, for those of you who have trained eyes, you can see that there is a beautiful left shoulder, head, and multiple right shoulders, which implies an inverse head and shoulder formation, which is a positive formation. So above my neckline of the inverse head and shoulder formation, and that is waiting at 216 Rand 44. The optimism of this formation will be confirmed, and we can assume that the momentum to the top can continue. I can either use the right or the left shoulder to identify when this inverse head and shoulder formation will become obsolete, and that is waiting at 199 Rand 26. Below that level, we will all hold our breath to see whether this formation will remain in play. My stochastic is not looking great. It's pointing downwards. My blue line has broken through my orange line. But let's see if that 40-week moving average will hold, and that is waiting at 19946. I just maybe want to just show you a little bit more optimistic. There is a window on Tiger Brands between the week of the 26th of February 2018 and the week of the 5th of March 2018. And that window closes at 416 Rand. And we know windows on weekly graphs weigh heavy. At some stage, the share has to go back and close that window. Yes, it can take decades to do that, but at some stage, Tiger Brands, assuming they remain listed, will have to go and close that window. Nice target for long-term investors that are patient and have the discipline to wait for that window to close. Huru wanted us to look at Go Life International, a very thin share, and which makes it sometimes very difficult to get in and out of the share. So at the moment, and I wanted to put some volume in here to show you that yes, since about it got listed, there is definitely been, since the week of the 23rd of November last year, a spike in volume. But when there is a spike in volume on a thin share, a fairly illiquid share, the share price needs to rise to confirm to us that the sellers have dried up and that there are only buyers left. So we can see the strong resistance on Go Life International that needs to change into a support is waiting at 4 cents. Above that level, you probably will get excited to know that, hey, the sellers have dried up and there's buyers left. But below 2 cents, the share will warn again, and it will be a concern because, it's so close to zero. So very difficult to invest in this share unless you've got an extremely long-term view. Then obviously 40-week moving average waiting at 8 cents. That's double the amount where, more than double of 4. And above that level only will the long-term sentiment change to positive. I would almost ignore a stochastic on such a thin share because there's not enough volume or movement on the graph to really make that elastic band move and stretch to a side. So above 4 cents, yes, then there is strong resistance will be overcome and there might be hope in the spike in volume, but below 2 cents, a bit of a concern on Go Life International. Jeff wanted to look at the Chicago Board of Exchange. And it's clear with all our international requests that investors are a little bit concerned about the toppishness or the heaviness of the US market and whether this rally that we have seen lately will continue. Now, Chicago Board of Exchange has found resistance at around $104.72. Take note, Jeff, it's a little bit lower than that previous strong resistance on the 26th of May that is waiting at $106.46. So should that strong support waiting at the bottom there at $97.72 starts to change into a resistance, one, we'll have a double top formation, and two, the next lower high will be confirmed, and that will be seen as negative. Remember, double top, triple tops, head and shoulder formations are all warning formations to imply that the top of the instrument is in place, the rally is in place, and that you should consider taking profit. However, should the Chicago Board of Exchange change $104.64 into a support again, and it can change that resistance at $106.46 into a support, we are sitting here with a beautiful double bottom that can take, and remember, what is the target of a double bottom? It's the full length of the right or the left leg projected upwards from the neckline where the formation will be confirmed, which means it can go possibly back to $132.21. Only when Chicago Board of Exchange starts to consolidate below $81.29, the strong support here, will the optimism of the double bottom be off the table. So keep an eye on 97.72 and above 104.64. Yes, it is stoppish, but have a look at that blue line, the K line. It's still pointing upwards. As soon as it looks like it's losing steam, then I would consider maybe taking profit on Chicago Board of Exchange.